Hey, in this video, I'm going to quickly show you how to buy call options in Robinhood for beginners. I'm going to show you how to actually do it, a tutorial, but also the best strategy and ways to think about buying a call option. Okay, so the first thing that you want to do is you simply want to go to your search and you want to pick a stock that you want to buy a call option on. So let's say you want to buy a call option on Tesla. You would type in Tesla here. Then you would go to trade options right here. So you're going to go to trade Tesla options. And basically you are going to first pick an expiration day. So in terms of strategy, the best way to pick a call option is you want to pick an expiration day that makes the most sense to you. So if you're making a short-term bet, you would pick a short-term expiration. If you're making a long-term bet, then a long-term call option, we call it a leap option, you would go for something very far out into the future. So you would scroll down and go for something maybe January, maybe it's June of next year. So in this example, we'll just use something shorter term. So let's go for a 2-week option, okay? Then all you have to do is right here on the ask price, this is how much people are asking for you to pay to buy a call option. So when you're buying a call option, you are paying money because you have to pay money for the privilege to own a call option, which gives you the rights to own 100 shares. A call option is really beneficial because you get to own 100 shares of a stock without having to pay the full price of the stock. So that's the biggest advantage of option trading. So if you were to buy Tesla 100 shares, it would be $17,000. If you were to buy a Tesla option here, at 170, it's only $700. So once you click the option right here to purchase it, all you really have to do is if you're on your mobile device, you just swipe up and you click purchase, or on the desktop version, you would click continue, and then you would review your order. So you would place the amount of contracts that you want. Now this is really important. So say you want 5 contracts, okay? Typically there's going to be a bid and an ask price. Why does this exist? Well, because the stock market is full of buyers and sellers. A person selling this option wants $7.10. A person buying this option wants to pay $6.90. If you want to get executed on this option, you can either put a market order in your brokerage, or if you're using really any brokerage, Robinhood, then you want to put a limit price. You want to put a limit price that you will get filled. So for example, if you're buying an option and you put in $3 right here, you're not going to get filled, okay? Because $3 is too low. If you put in $6.90, you'll actually also not get filled. Although the bid is $6.90, you're unlikely, pretty much the chances are 0 for you to buy this for $6.90. What you want to do is you want to pick the middle point. So the middle point here would be $7 because 7 is the middle of $6.90 and $7.10. So you would just pick the middle point, and this is how you would get executed, and then you just click review order. Now for me, I like to buy call options on a company that I am bullish on, because buying call options is a bullish strategy. So when buying call options, you want to make sure that a stock is moving up. There's a few ways to do that. You can look for a stock that has a low RSI. So you can see on my screen right now on Yahoo Finance, I'm taking a look at Adobe stock. So for example, Adobe here, the RSI is just 38. So you want to pay attention to technical analysis. If the RSI is low, this is an indicator that the stock is oversold, which may be an indicator for you to buy a call option and jump into the stock. Another thing that you want to look for is a reversal, okay? So if a stock right here, as you can see, Adobe, it kind of crashed down. It had a really many negative days here, and it went from being over a $600 stock down to $473. So if you think that the stock can bridge a gap, specifically it's in a lot of bearish momentum, buying a call option can be very interesting play, because a call option gives you a lot of leverage, okay? If a stock goes up in the short term, you will see a huge rise in a call option. And that's the whole point of option trading, is it gives you a really big leverage factor. There's actually 2 points of option trading. One is to hedge your portfolio of stocks that you already have and create income, which is what I cover on this channel. If you're not subscribed, please do so. And the other way is just buying options and having huge rewards. So you can be either a trader, or you can actually be both trader and go for high risk, high reward plays, as well as creating income in your portfolio. You could have a certain portion of your portfolio, say 90% being in safe strategies and 10% being in riskier strategies. Buying call options is actually one of the best strategies if you can be right on direction. So if I were to buy a call option again on a different stock, let's say that we're just going to pick a random stock here. I'm going to show you an example. Let's say that we want to go for Starbucks, okay? So all you have to do is, click into any ticker, okay? And then you just go into trade the options, and then you will go to buy call option. And again, you can go for short-term call options. I will tell you from my experience from working at Goldman Sachs as well as on Wall Street for a long time, buying short-term call options is the best way to lose money. The only time you actually want to buy a call option is right before earnings or any big event. Okay, so there's a big event, there's a big unveil, there's a new Apple product, then yes, you can buy a call option. However, buying call options is pretty bad in a short-term strategy as well as even a long-term strategy. The only way to profit is if you are correct. But for example, let me show you. If I go to a short-term call option and I buy something that's out of the money, like if I were to buy like $100 call option right here, you can see that the delta here is 0.07. Your chances of success are 7%. If you buy a call option that is out of the money, that is the worst thing that you can do unless the stock has earnings, or unless you're very, very bullish on a stock's momentum and its story and its vision in the short term, which is essentially gambling. So I think it's really important for you to understand that if you're going to be buying call options, what you want to do is you want to buy something closer to the money. In this example right here, there's a 7% chance of success. The volume is very low. So you want to pay attention that if there's low volume, that's not a good thing, as well as the bid-ask spread here is very wide, 18 and 27. That's not good. You're losing a lot of money by buying this. As you can see, you need the stock to go up like crazy for you to see a profit. Now, on the other hand, you can make a lot of money by buying in the money options. So you can buy something like the 80 call option right here. You see this is 80 call option. It's going to cost you a decent amount of money. However, your break even is right here. You have very short distance, okay? Your distance is very short. From here to here, the distance is like almost nothing. If it just goes up a little bit, you're already in the money, you're making money. Also, you don't have to hold the option until expiration. So a lot of people think that they have to wait until the last day of the option. You can buy an option and then in the next 10 minutes, you can sell it. If you made $30 in 10 minutes and you're like, I'm happy with the money that I made short term, please, by all means, you can close out an option and just close it and book it for a profit.